Hello everyone, my name is Deepak. I'm with Tax Code Advisors. Coming up with interesting strategies is my specialty. My job is to save as much as possible from whatever tools that you might have and introduce you to new tools and techniques that you can use to improve your financial well-being. So these days, I'm getting a very interesting question asked again and again, which is what is happening with our market? And people have come up with interesting excuses. Some people say it's because of Japan. Japan increased interest rates, and a lot of people had been investing in the U.S. And now to pay back that debt, people are selling off and paying back Japan. That's one reason. Some people say, well, it's an election year. People are worried that what if this party wins, what will happen? Other party wins, what will happen? Another reason, unemployment is increasing. We could have a recession. Well, wait a minute. Feds did not reduce the interest rates. Well, Fed didn't tell you they're going to reduce the interest rate. You're expecting that they're going to reduce the interest rate. So yeah, they didn't do what you want them to do. So that's why market is selling. Anyhow, the point is there are always reasons why things are bad. Stock markets depends on earnings. If companies are making money, businesses are making money, stocks goes up. Very simple. When companies are not making money, stock goes down. Regardless of what the interest rate is, regardless of who wins, regardless of what's happening in Japan, what's happening in Europe, who is fighting with who, as long as businesses are making money, you as an individual investor will make money. Might not be today, might not be tomorrow, but over a long term, you'll be just fine. So I'm not worried about it as long as you have companies that are good. But what if you don't have a long term? What if you are, in your late 50s or 60s and you don't want to take that kind of risk? So much volatility in the market is just bothering you. Or maybe you just don't want to invest in stock market and you're thinking about are there alternatives. So the good news is there are many alternatives out there. There are a lot of different ways you can take advantage of market and do just fine. So I'm going to talk about that today. I'm going to share some ideas, some interesting ways of structuring your transactions to make a good amount of return safely without having to take a lot of risk. Because I don't know, especially older you get, the risk becomes astronomical, right? It just can destroy your retirement. We definitely don't want that to happen. So I'm going to share a couple of case studies with you and see if you like them and you want to learn more about them. Definitely reach out to me and we can set up a consultation session and discuss that. So I'll give you a couple of thought processes first. Number one, we all know that for the longest time we were in the low interest rate environment, right? You would agree with me. Now, just right now, as this is August 7th today, so I think if I were to ask you, what do you think will happen with interest rates in next 3 months, 6 months, a year, you're probably going to say they're going to come down. They're going to be lower. Okay. So what will be the impact? Well, impact will be that small businesses will benefit from it. Our economy will benefit from it. Real estate will benefit from it. So we'll see our economy will get a push and market will start to go up. Once again, so those of you guys who wants to take advantage of those opportunities, that is a possibility. But there's another possibility. Another possibility is for all the people who don't like to take too much risk. So I'm going to talk to some of you guys who don't want to take that kind of risk. So there are income generating products out there that are designed in multiple different ways. In some ways, they're extremely costly. Some ways they sound too good to be true, but they don't really work that well. Sometimes these products are sold at the tax strategies, but the strategy is actually not there because the person selling you doesn't understand taxation. They're salespeople and they're trying to teach you sales side of it. They don't really understand the tax side of it. So they're not really that good. So there are hundreds of those products out there, but some of them are actually good. And one of the products that I was working with recently, there was a couple, husband and wife. They came in and they wanted to, uh, you know, do something with some chunk of money they had sitting on. They go like, look, we definitely don't want to go into the stock market. We are not ready to deal with real estate. It's too complicated. We don't want to take a loan or whatnot. Putting in a bank is one option, but the problem with that is, interest rates will probably come down in 6 months, and who knows, they will continue to come down, and probably in a year or so we'll be back to nothing on CDs. So what should I do? Should I just leave it in the bank? Are there other alternatives? So we said, well, so one of the interesting things we can work with is we buy an income for you, we buy a pension for you from insurance company. So we give them this lump sum money and we ask them to create a guaranteed income for you. That will last you as long as you're alive or your spouse is alive. That means even if the husband passes away, as long as wife is there, she'll continue to get paid. Now, you may sound like, well, what's a big deal about that? But trust me, I'm in consulting business. So many times I will see when people come in, usually one spouse is more financially savvy than the other spouse. So when that financially savvy spouse passes away, the other spouse is the one who becomes victim of various kind of scams, frauds, even financial professionals who don't know what they're doing. They try to sell them products and services that this client doesn't need, and ultimately they lose out significant amount of capital. So with these guaranteed income products, that risk completely goes away. As long as one of the spouses is alive, they continue to get paid. Same amount, you get paid, spouse get paid, so you're good. So different times there are different rates, but because interest rates are high right now, I ran an illustration for a client, and I think the rate was between somewhere around 8.5 to like 9 point something. So let's just say on average 9%, which is a very good rate of return. So imagine if somebody had $1 million, that's a $90,000 income per year, and that's lifetime. That means as long as you're alive, so if somebody is 60 or 70-year-old, and let's just say between husband and wife there is a 30-year of income, that $1 million in next 2 to 3 years could be $3 million of income that you get out of that product. So pretty good, right? Without taking a significant amount of risk like you take in markets and whatnot. So that's one example. Now, if you come back, let's say 6 months from now or a year from now, and you go like, hey, Deepak, I watched that video. Now, probably there are going to be other products out there, other things out there at that time, but probably this kind of rate of return won't be there. So that's one example of what you can expect right now. Now, another issue with this couple was that, what we want to do is we want our kids to have this money, but we have nothing else to live on. So if we give this to our kids, how are we going to spend our next 20, 30 years in retirement? And if we don't give it to our kids, we feel guilty that we did not pass on anything to our kids. So very interesting scenario here. They want to use the money and they want to pass it on to their kids. So in that case, one of the ideas that you can work with, it's not commonly found, most insurance agents don't sell it, but there's something called survivor insurance policy, meaning you buy the policy on both husband and wife together, and it only pays when both spouses passes away. So not the first. This way, the insurance company has a longer time to collect the premium, so it's in their interest, basically. So what I suggested was that for whatever amount they have in savings, we generate a guaranteed income for them and take small percentage of that income and then buy a survivor life insurance. By doing that, now they have the income to live on, and when they pass on, their heirs, their kids, will automatically get the death benefit, right? So this is a double benefit. So they got benefit today, and they will get the benefit later on as well. So this way they can take care of both. So that's a great example of how you can structure some savings. You know, now some of you guys might have money sitting like maybe in an IRA account, maybe in Roth account, maybe in 401ks from an employer or whatnot. So trust me that all of these strategies can be used with them as well. So it's not like you have to have a separate kind of fund somewhere to do these kind of deals. So very simple, very effective in the current market. That's a great way to do that. Now, most of the time, income products generate between 4 to 5%. But right now, because interest rates are so high, you're able to generate a lot more than other times. So if you are sitting on some cash that you want to reduce your risk, you want to transfer the risk of living longer to an insurance company, right? Because I'll give an example. Let's just say you have $1 million today, and let's just say you will probably live for 25, 30 years. And you take out $100,000 per year. Well, roughly in about 10, 12 years, you're going to be running out of money because you took all the distribution out. What happens afterwards? Well, you got nothing left. With a lifetime income, when you run out of your accumulated cash value, you still continue to get paid. So that's the beauty of these products. So if you want to learn about them, if you want me to show you how they work, then you can set up an appointment with me and we can kind of go over some of these strategies. There are many ways to kind of use these. You can use these to fund your retirement. You can use these to fund a real estate transaction. You can fund these to, for business, for example, anything that produces income, anything that produces revenue for you, you can use these kind of products. And I say revenue because I want you to reduce cash. I don't want you to take the money and go have a vacation with it. Although you could, it's just not a good strategy. Now, if you're retired, that's a different story. That means you're not really doing it for saving, you're doing it for your income, for your lifestyle. Then that's okay. But you stick with that budget because they will tell you how much they're going to give you. You're not going to want to go over that. So if you have friends, family members, parents, and you want to explore some of these less risky strategies, then definitely reach out to me and let me share some of the ideas I have and show you how you can save with these. All right. So thank you so much. Just go to taxcodeadvisors.com and you can book an appointment with me there. All right. Thank you.